doing business in Africa. You can't afford to be without Africa Investor.
Look, thanks very much, Hubert. And as one of your previous, I'm very honoured and humbled to be involved in this conversation. I suppose I've got two hats on, or three, but two I'll focus on. Is one with the ICC, and the other is IFM. We are a $200 billion a year, a $200 billion infrastructure investment fund out of Australia. By the way, we end up in Africa by accident, not by design. It's actually after other acquisitions we do, we end up in Africa, and yet we're prepared to do hard investments in Latin America and elsewhere. So I think one of the comments by Nick before is really relevant to us. It really comes down to rule of law and understanding our investment thesis. And what we've discovered is that countries prepared to engage in that conversation are very attractive potential investment opportunities for us. But there's a longer conversation to be had. I can just make one other quick comment. This issue of trading more with each other than investing in each other is actually not unique to Africa, by the way. It's also a common theme in Asia Pacific. I formerly chaired Finance and Economics in the Asia Pacific Business Advisory Council. One of the things we noted was that there was an inability to get away infrastructure projects. One of there was the capital markets in Asia are remarkably weak. They're not as strong, and they lack depth. And so one of our jobs was to I created a thing called the Asia Pacific Financial Forum, which was designed solely and with the authorization of Asia Pacific leaders to develop up the capital markets to enable more depth, to enable alternate mechanisms to be used for developing infrastructure projects. In Indonesia, for example, most lending is still private bank lending. They don't have the sophisticated instruments which are required for investors. So I apologize if that's a segue, but there's something learned, I think, from what's happened elsewhere. There's a lot of other regions where the challenge of investing within itself is limited. And I must compliment the most immediate speaker, understanding the shifts that are going to occur as a consequence of COVID, and in particular, this issue around supply chains. I think to underestimate the importance of the African Continental Free Trade Agreement. Anything that will ease your capacity of supply chains will be extremely attractive and actually will be a huge source of opportunity, particularly as supply chains become more regional in nature and less elongated than they were before. So facilitating that. My other quick comment, by the way, and ICC completely supports Africa PLC, this issue of digitalization, I was on a call last night with the Secretary General of the World Customs Organization, pointing out to him that actually one of the challenges in food movement, particularly in Africa, is there's still a requirement for paper-based documents to pass and wet signatures. So this issue about how we shift and use the opportunity in a way of a crisis, there's always less resistance to change in a crisis. Systemic change could be called for an opportunity here, where we could potentially get the African Union to look at and really comes down to giving the same legal weight to digitalised documentation as it does to and that is something I think could be a very powerful advocacy point for this group to push. The other point on advocacy I've just made, and I've been discussing with the guys who work for me in New York, who work particularly with the international financial institutions. The power of this group in terms of advocacy is that you are bottom up, if I can put it that way. The difficulty you have with international financial institutions and others is their predictions and prescriptions for change are often top down. There's a really powerful piece out of the granular nature and the focused nature of the conversations I've had. And so we think there's a real potential there. And there's also a movement which is actually really relevant. You know, there is actually a challenge, as you know, on actually providing financing more broadly in terms of sustainable development. Paris Agreement, which is actually not dissimilar to here. The financial markets and the Financial Stability Board is not helpful. We actually do need to focus on those sorts of entities as well, and not just on the gnomes of Basel on this. It's actually around the Financial Stability Board and getting some flexibility there. And I do think that we're going to see, and this is one project I'm working on at the moment with ICC, some tension emerging on another point that Hubert identified around trade finance. It's not that there's not enough at the moment, and that's actually because trade flows have actually collapsed by more than a third. It's actually there will not be enough available for the future. if we want the economic growth to come back, there were reliance on about $1.7 trillion worth of trade to come in. There is not the financing available. So we'll need to focus on the export finance credit agencies, making certain they're better funded. We're going to need to focus on ensuring multilateral development banks actually buttress up their capacity to support. And we need to actually focus on Basel III, and actually we need to get more flexibility. And there is flexibility in the way in which risk is allocated to trade finance. So there are three things. And actually bringing your voices into that would be extremely powerful. I apologise, I think I've done 1 minute more than my 5, or maybe 2 minutes more, but thank you very much for allowing me to participate. I also, if I could quickly, I would like to catch up with the guy from One Planet. I launched this morning the ICC Carbon Council, because we are not going to wait for the creation of a carbon trading mechanism. So we're launching that. So if I get an opportunity, I'll send you a private. Anyway, thank you very much. Great to be.
Doing business in Africa. You can't afford to be without Africa Investor.